For years, Bitcoin captivated the world with its revolutionary promise, a decentralized digital currency, free from traditional financial institutions. It offered a vision of financial liberation, attracting a wave of early adopters who, undeniably, reaped significant rewards. Yet the landscape has dramatically shifted.
Today, that initial promise is increasingly overshadowed by a confluence of negative factors. What once seemed like an unstoppable force now presents a far less promising picture, not just for new entrants, but for existing investors too. It is time for a critical re-evaluation. The most glaring issue facing Bitcoin is its staggering environmental footprint. The proof-of-work mining process, fundamental to its operation, is notoriously energy-intensive, consuming vast amounts of electricity annually. This consumption rivals that of entire nations. Much of this energy is still sourced from fossil fuels, directly contributing to carbon emissions on a massive scale. Bitcoin has become a significant, undeniable player in the global climate crisis, exacerbating environmental degradation. This raises serious questions about its long-term viability. Such unsustainable practices are increasingly scrutinized as environmental concerns intensify globally. Governments and regulatory bodies are beginning to tighten environmental regulations, posing an existential threat to Bitcoin's current operational model. The world is moving towards sustainability, leaving Bitcoin behind. Beyond its environmental impact, Bitcoin is defined by extreme volatility. Its price swings are notoriously unpredictable, making it a highly risky asset for anyone seeking financial stability. This unpredictability is not a feature, but a fundamental flaw for widespread adoption. The market is susceptible to manipulation, prone to speculative bubbles that inflate rapidly and burst without warning. Investors are left vulnerable to sudden, dramatic crashes, often losing substantial portions of their capital in mere hours. This is not a stable investment. Such extreme price fluctuations mean Bitcoin is unsuitable for mainstream adoption as a reliable currency. Businesses cannot price goods and services effectively, and individuals cannot budget with such uncertainty. It fundamentally undermines its utility as money. Consequently, Bitcoin is also unsuitable for prudent, long-term investment strategies. Its inherent instability makes it a gamble rather than a foundational asset for wealth preservation or growth. Investors seeking genuine financial security should look elsewhere. Furthermore, Bitcoin has largely failed to become a widely accepted form of payment for everyday transactions. Despite years of development and hype, its practical utility remains severely limited in the real world. It struggles to fulfill its original purpose. Transaction fees can often be prohibitively high, especially during periods of network congestion. Coupled with slow processing times, Bitcoin becomes impractical for routine purchases like groceries or coffee. It simply cannot compete with traditional payment systems. The evolving and uncertain regulatory landscape adds another layer of risk. Governments worldwide are grappling with how to classify and control cryptocurrencies, leading to potential for stricter regulations. This uncertainty deters institutional adoption and mainstream use. There is a tangible risk of outright bans in various jurisdictions, as some nations have already demonstrated. Such actions could severely impact Bitcoin's liquidity and value, leaving investors stranded. The regulatory hammer is a constant threat. While Bitcoin stagnates, the broader blockchain ecosystem has evolved dramatically. A new generation of alternative cryptocurrencies has emerged, offering significant improvements over Bitcoin's aging design. Innovation has not stood still. These newer cryptos boast faster transaction speeds, making them far more practical for daily use. They also offer substantially lower fees, addressing one of Bitcoin's major shortcomings. Efficiency is now a core design principle for many. Crucially, many alternatives employ more energy-efficient mining processes, such as proof of stake, drastically reducing their environmental impact. This aligns them with global sustainability goals. Unlike Bitcoin, they offer a greener path forward. These advanced blockchains incorporate more sophisticated features and functionalities, extending beyond simple currency. They power decentralized applications, smart contracts, and entire ecosystems, offering greater utility and scalability than Bitcoin ever could. This increased competition in the cryptocurrency market highlights Bitcoin's inherent design limitations. Its foundational architecture, while groundbreaking for its time, is now a bottleneck. It struggles to adapt to modern demands. This suggests a waning dominance for Bitcoin in the crypto market. As more efficient, versatile, and sustainable alternatives gain traction, Bitcoin's position as the undisputed leader is increasingly challenged. Its first-mover advantage is eroding. Considering the combined weight of these factors, a compelling argument emerges for exiting Bitcoin. The environmental devastation, extreme volatility, and persistent lack of practical utility paint a stark picture. It is time to acknowledge these realities. The risks associated with Bitcoin now demonstrably outweigh its potential rewards for most investors. The speculative frenzy has subsided, revealing a fundamentally flawed asset for long-term financial health. Prudence demands a change in strategy. It is imperative to re-evaluate Bitcoin's place in your financial landscape with a critical, informed perspective. The narrative of inevitable growth and revolutionary change no longer holds true in the face of overwhelming evidence. The time for blind faith is over. Instead, consider more sustainable and practical investment options, both within and outside the crypto space. The future of finance is evolving, and clinging to an outdated, environmentally damaging, and volatile asset is a disservice to your financial well-being.